The broadcast is now starting. All attendees are in listen-only mode.
Good morning, everybody, and welcome to our webinar today with Alec Hogg, looking at investing for South Africa's new world after 2024. My name is Dineo, and I'm joined on the line by BizNews founder Alec Hogg. And Alec is going to be taking us through his presentation, which is basically a consolidation of the roadshows we had 2 weeks ago, and he's just going to rehash it for those of you who couldn't make the face-to-face event. Before I hand over to Alec, I just want to make sure that everyone on the line can hear me clearly. So if you can, please could you indicate by raising your digital hand? All right, I see a few hands, so I'm going to hand over to Alec. Alec, thank you so much for joining us and welcome.
Thanks, Dineo, and let's switch on the little webcam to start with. As you can see, I'm looking very intelligent today, Dineo. I didn't wear my glasses doing the presentations, but I'm looking at a screen now, and you know, it's always better. And of course, I've got our managing editor, BizNews' managing editor, Stuart Lohman, is with me as well. There he is, wearing an unfortunate top, but it is what it is. And we have a really good presentation for you today. We're going to carry on for the first 45 minutes. I'll take you through, as Dineo said, what we gave to the live audiences in Durban, Cape Town, and Johannesburg a couple of weeks. Was it a couple of weeks ago? Yeah, I think it was. And then Dineo will actually unpack for us a really interesting product that Standard Bank online share trading have got. It's not on the web trader stocks, but it is on the OST stocks, and that product is, I think it's ahead of the market. I think it's ahead of everybody else, where you can actually borrow against the stocks that you hold, so you don't have to sell the shares if you need money in a hurry. Fantastic product. Anyway, she's going to tell us about that later. Stu, from your side, happy with all the tech? All good?
Yes, thanks, Alec. I see I've shifted positions today. I did all the tech checks. I saw the hands coming through. That's all good. I know when we run these, we do like to keep them conversational. There is, on that same control panel, there's little questions, a drop-down menu, a little question mark. Please put your questions and then I'll pass them on to Alec as he goes through. But Alec, I suppose we're on a clock, so let me not delay any longer.
Yeah, brilliant. And we will do that. We will answer the questions as we go through the presentation. I'm going to, I have updated it a little bit from what we were doing face-to-face. So you've got maybe a more updated number. Let's kick off immediately. And just to understand the basis of this presentation is that in a developing country like South Africa, it's a place where politics is greater than economics. And you can refer this back to a developed country like the UK, where Liz Truss was the shortest ever serving prime minister. And the reason for that was that she thought that she could actually cheat economics. Now, in a developed country, they take a lot of notice of what happens in the economy. And if you manage it badly, you get kicked out of office as a politician. In a developing country, unfortunately for the population as a whole, we don't really yet understand how important it is for economics to be properly managed. And so we still vote on emotion, and politics exceeds economics. And that is, for South Africa, a very important place to start from, because we are moving now into an election in 2024, which is a watershed, because it is something that hasn't happened in South Africa since we got democracy in 1994. So we're now going to be no more a one-party state. And that's one of the problems about democracy. Yes, it's got its flaws. It's the best system that we know in the world, of course. But if people don't fully participate as active citizens, then democracy can not always be used to the degree that it should be used. And we are, however, going into 2024 with an election which is going to bring a real democratic system to South Africa. And I'm going to unpack that because it isn't something that has been fully appreciated. I had a really good interview yesterday with Dr. Frans Cronje, where he agreed that we as a nation haven't quite caught on to what's going to happen post-2024 when the ANC goes below 50% in the vote and then has to have a partner and introduces to South Africa what is called coalition politics. Already we've seen it in some of our cities, hasn't been a great start. Some people are really worried about the impact that coalition politics is going to have in the parliament, and I'm going to try and dispel that and just look at it from the perspective of an investor. So what do you as an investor do when you get this watershed change that is less than 500 days away, just over 500 days away, as Franz Crinier was telling us yesterday. See, Stu, you put that up on the chat box. It's well worth making a note of that and going and watching what this superb political scientist has to say. So what I did was, we can only deal really in what we know right now. So I went through the by-elections post the local elections in November last year, a year ago, when we had those local elections and the ANC came out really badly, below 50% for the first time in any major election around the country. And what are they telling us about where we're going into the future? And on the absolute update, you can see these are of 48. There have been 48 by-elections since November 2021. By-elections happen when someone gets voted in as a councillor, and then they either switch political parties, die, or leave politics. So you need to get a new councillor in, and as a consequence of that, you have another election. It's very interesting to see how the EFF has been giving the ANC a hiding in the rural areas. There are 4 switches to the advantage of the EFF in rural areas, and the other parties have been doing better in well, certainly in the Northern Cape. There you can see the ANC lost that seat to the DA, and then in the Western Cape, where the DA did far better than the Patriotic Alliance, which had a very small percentage of the vote, but there were many parties that were participating in that. Anyway, these are all of the wards where councillors have changed. And what I did was have a look here on this slide on who's the winners and who the losers. And then you can see there that the EFF has had 4 net wins. So it has definitely been in the ascendancy, but remembering that this is happening in the rural areas where people are very displeased with the ANC at the moment, not just in the urban areas, but in the rural areas too. The DA has held on to 8 of its wards, but lost 2. It lost 1, in fact, yesterday to the Freedom Front, and that might be a consequence of a press release that came out today where they're very cross with the Freedom Front on something that's going on in Vryheid. So it isn't that the non-ANC parties are fully aligned. They're also fighting amongst themselves, but you can see the big loser is the ANC, which has lost 7 of the 46 by-elections that it contested. It didn't contest 2, one in Cape Town and another one in Prince Albert, but it contested the other 40 of the 48 by-elections that we've had, contested 46 of them, and it lost 7 of those where it was in the ascendancy already and held on to 21. Not a good average, not a good average at all. And then I took this, and I don't expect that you can go through the detail of this, but it's just to give you an understanding of what the by-elections are showing us. And the by-elections are very important because they are a temperature gauge, if you like, of the way the country is thinking. And here you can see that on average, in the 46 by-elections that the ANC, the ruling party in South Africa, has contested, they are down by 4 percentage points. So the current share of the vote for the ANC is 42%. We've got about 18 months to go until this big election, the watershed. You could imagine that at the very least that is going to continue, that slide's going to continue. So what I did then was assume, as a conservative situation, that the ANC comes out at 41%. So in other words, the slide that we've seen continues, and that next year, in 2024, in the parliamentary election, the ANC gets 41% of the vote. All of this is really important because it actually gives you an insight into what the stock market is discounting on the political side. And remember that politics is greater than economics in a developing country, a country like ours. It's very interesting to have a look at this. What I did here was take the ANC's share of South Africa's vote going back to 2004, so the last 20 years, and you can, in both the national elections and the local elections. So we have elections every 5 years in this country on a parliamentary basis, but also every 5 years on a local election, locals and provinces. So this gives you an understanding of what the nation is thinking about the party that's been in the ruling situation in South Africa since 1994, remembering that if you get 50.1% of the vote, you make the rules. That's how democracy works. So it's not so good because you got 49.9% of the people who may be not happy with you, and we're seeing what that what the consequences of that are in, for instance, the United States of America right now. But anyway, it is the system that we have, and it's the system we work from, and so you need to have a look at that line which says 50%, and that's the key. So the ANC has been declining. In 2019, the previous national election for parliament, in other words, who runs the country, they went up. And the reason for that was something called Ramaphoria. We now have what the analysts are calling Rama reality, and that is showing that the ANC has continued in its slide since 2014. The other parties, for purposes of our example and for our scenario, are assumed that the DA will continue. It's consolidated again. It had a bad election in 2019, the national election, where it went down, as you can see on this graph very clearly, from over 25% to just over 20%. That's a big swing for the DA. Then it improved in the most recent local election, and the assumption is that it will do better still in 2024, but perhaps not back to where it was in 2016. The EFF appears to have topped out. There are, although they're winning handsomely in the rural areas, in the urban areas, the EFF is really not performing well. So when you have a look at the by-elections, what they're telling us is that where you have EFF versus ANC at a two-horse race, the EFF is doing extremely well because of the unhappiness of people with the ANC at the moment. And the analysts tell us that the EFF is likely to come in around where it finished in the 2021 election, maybe a little higher at 10.5%. And here are the possible outcomes. And this is where the fun starts. And you can have a lot of fun playing with this yourself and making your own assumptions. But the important thing here is if the scenario that we've outlaid, which the by-elections are suggesting, and by the way, Ipsos, which is one of the reputable agencies that does research into politics, also comes up with 41% for the ANC in the 2024 elections. It's surprising. They speak to people and do telephone interviews with them, and what came back to them was 41%, which is exactly what the by-elections are suggesting to us as well. And when you have a look at this pie chart, no one's got 50%. That's the first and most important thing. So no one is going to make all the rules. No one political party. If you break it down, you've got the ANC at 41, the biggest party, the DA at 22. I've put Action SA in at 12. This might be optimistic, but Action SA has really got its act together, and it has polled very well in the by-elections it's contested in the urban areas, over 20% in most of them. So to assume that Action SA will get 12% in the next major election is not outside of the realms of the possible. Then you can see the EFF there at level pegging around 11, where it is at the moment. Next up, a big growth for the IFP, but still only around 8%. The IFP is polling very well in KZN, where in many of the contests it goes head-to-head with the ANC. So you can see what's happening. The ANC is losing ground in those provinces where the IFP, which is primarily a dominant tribal party, primarily people from KwaZulu-Natal, Zulus, that is where they aren't represented in the rural areas. The EFF is, and the EFF is doing pretty well against the ANC, as is the IFP in those rural elections. And then adding in Freedom Front Plus, which has got a solid and a significant improvement in the last local elections, which is anticipated it'll hold on to that. HCDP, Gayton McKenzie's Patriotic Alliance, around 1% of the national vote in the last election. I put Musi Maimani's 1SA in there at 1%, the UDM at 0.5%, and that pretty much is it. So now you look at these different slices in the pie, and you say, who is going to get together to get to that all-important 50% level? And looking at that, I looked at some scenarios. That's all they are. There's a heck of a lot that's going to happen between now and the election in 2024. But scenario one, the one that France Cronje favors, if you watch that video, is the ANC and the DA get together. They would, on these numbers, have 63% of the vote. It's a good story for investors. There would be continued economic reforms, as we have seen at Eskom and Transnet, and we've also seen some better budgeting. It's a problem, and I'll talk about that in a moment, but it would be a good consequence for investors. Adjusted legislation, which investors like, higher foreign investment, not a flood, but there would be higher, and then significantly increased GDP growth. We've been running for the last 10 years in this country at an economic growth rate which is lower than the population growth rate. So something has to give at some point in time, and hopefully scenario one would suggest that this is what's going to give, that the ANC and the DA will get together, stable government, work together, and economic growth will grow. Scenario two is where the ANC and the EFF get together. This is a scenario which was proposed as the most likely in my interview with R.W. Johnson, the former Oxford Don. And what R.W. Johnson says is that when you are the biggest party, you want to get just enough votes to get yourself over 50%. So, and the reason for that is that you give away less. So in this case, they would give away only 11% to the EFF, whereas with the DA, you'd be giving away double that amount, which means more cabinet positions that you've got to give away, etc. In this scenario, however, for investors is not a good one. And this is the scenario that is being discounted by the stock market today, where there's a slowdown in the economic reforms that we have seen. There would be a continuation of the investment strike, and that the GDP would continue at a pedestrian rate. That's scenario two. Scenario three is a dream scenario for investors. And having spoken to those that we rely on, our experts, they say that the stock market would take off because the economic growth would take off, investment would flood into South Africa, there'd be many jobs created, and the country would start to fulfill some of the potential, the obvious potential that everybody knows exists in our magnificent country, but we just can't seem to get out of our own way. And this is a scenario where you get the business-friendly parties, the DA, Action SA, IFP, Freedom Front Plus, Patriotic Alliance, One South Africa, that's Muzi's party, ACDP, UDM, all coming together, coalescing. At the moment, they have 47%. They would need to get together more than 51% to introduce that coalition into the South African scenario. It's an interesting scenario. It's the one that investors would be hoping for most. We've got 18 months or so to go until the election. We don't know how things are going to play out in those 18 months, but on the current trends, it's possible that this scenario actually does eventuate. Then you would have, as I've put there for the scenario, accelerated reforms, substantially higher economic growth as a consequence of that, and pro-business legislation being brought through, enacted, because when you got 50 plus 1% or plus one vote, you can push through legislation through Parliament, which would reverse a lot of the anti-business legislation we've seen. You'd have pro-business legislation and foreign investment would surge. Those are the three scenarios. Even in scenario three, though, challenging times. Now, the reason why the ANC has been losing so much of the vote is South Africans have woken up to how poorly the economy has been managed since 2009. Up to 2009, in fact, in 2009, there was a budget surplus generated by this country. And as you can see, between 94 and 2009, the ANC government was fiscally conservative. They were paying back debt. We were repaying debt. It went from, on that graph, you can see about 1995, we were at 50% debt to GDP as a ratio. That's the number you use. In other words, your state debt as a percentage of the size of your economy, that has improved or had improved under first Mandela and then Mbeki's presidency to 2009 to a figure of 26%. This is a critical number. Imagine it like it's your access bond, your Standard Bank access bond. And if you're paying off your access bond, you're paying the interest to begin with, and you're paying the capital off, eventually you get to zero, you got no interest payments. And then the money that comes in from tax, the income that you earn, can be used productively. In this case, however, we had a fellow called Jacob Zuma. He came in 2009. He didn't care how much he borrowed. And having done the good work under Mbeki and Mandela, the country then wasted all of that. And the problem that you have when you're borrowing is that you're borrowing from your future generations. So it's the young people who have to pay off this debt into the future. And as you can see, from 2009 up until the current day, the debt in South Africa, the access bond, has been going through the roof. Every year, on the one hand, there's been theft, and we know that through corruption. We know that from the Zondo Commission. But on the other hand, there's been overspending. And it really should stagger us as taxpayers, as investors in SA Inc. What has happened here? This is our home. And suddenly we're landed with an enormous debt burden because of mismanagement of the economy and because of theft and corruption. Today, of every R1 that is paid in tax, 18 cents goes to service interest. Let that sink in. For every R1 that is paid in tax in South Africa, 18 cents goes to service interest. For every rand that is spent in South Africa, 15 cents of the rand spent, because we run budget deficits, and I'll show you what that looks like in a minute. There we go. 15 cents goes to service the debt. And that's gone up, well, from the manual time there in 2009, from single figures. So well into single figures. So that means you've got less money to invest in the economy, in jobs, in social services, etc. But the worst thing about this is at the moment, South Africa is borrowing to pay social grants, and in particular, the COVID grant. The COVID grant is just a political ploy today. During COVID, you can understand, give people 350 Rand. That's good because it can help them through the gap. But COVID's over, and the grant has been extended until February 2024, and with an election just around the corner, there's no way that grant is going. But we, as a nation, are taking 2 billion Rand a month, which we are borrowing to pay people so they're going to vote for the ruling party. That's the theory anyway. It's not working because, as we see from the by-elections, the social grant's not working, but politicians tend not to take away goodies that they've given to people. But that's the situation South Africa's in. We do have a difficult, and this is our finances. This is like, imagine that you're sitting there, you've got an access bond, you are, Enoch Godondwana said, for the first time, we are not taking more in our access bond. In other words, we're not increasing the access bond for capital every year. We are running what is called a primary budget surplus this year. That means that for the first time in 15 years, for the last 15 years, and you can see the consequence of this, the last 15 years, we've not only not been paying the interest, so it's like we're not been making the repayments on the access bond, but we've actually been increasing the capital on the access bond. So that's why the country's in such a dire state at the moment. And then you can look at this, which is showing you that the budget deficit, which has improved because of the boom in commodity prices, even there, we still at the moment not paying our interest every year. So it's like you got an access bond, okay, you're not drawing capital anymore, but you're actually not paying it off a monthly installment. So as a consequence, the access bond keeps rising. And these figures, by the way, look much better than they would have looked, because a year or so ago, the government rebased the size of the economy by, I think it was about 15%. It went from $350 billion to $410 billion because, well, it helps all the numbers look a little bit better. Had that not been the case, we would be sitting on a debt to GDP ratio of 86%, so directly comparable. Anyway, that's the bad news. We know the bad news, but I just wanted you to understand that this is no quick fix. We're in a country which has really been badly managed since 2009. However, the share prices on the JSE, especially SA Inc. companies that are reliant on the South African economy, are reflecting all of this. And my thesis is to say, when you look at the watershed election that is coming in 2024, the likelihood of a business-friendly or business-friendlier government, which you pretty much got to do because you can't really You know, some political parties believe destroy the economy. That's fine, because we'll rebuild it much better in time to come. That's pretty much the thesis of the EFF. Whereas the other 90% of the population say, no, don't destroy the economy. Keep what you've got and build on it. Now, you can, with business-friendly strategies, if there's a good performance by the pro-business parties, a fantastic performance by the pro-business parties, then this kind of thing will start getting addressed very quickly, because as you get money in the country, you grow, you get more taxes. Good news. If it's a coalition of the friendlier business parties, i.e. that scenario 1 between the DA and the ANC, that'll also be a more positive situation. But the share prices on the JSE are reflecting scenario 2, which is a continuation of where we are at the moment. In other words, bad economy for the next 5 years. And if either of the brighter options come through, and I do believe that they will, because South Africans, when their back's against the wall, they always do the right thing. Voters always do. We sometimes need to take a lot of pain, but there's been plenty of pain in this country. And the by-elections are suggesting that South Africans will vote in a way that is in their interests post-2024. And should that happen, here are some of the stocks for you to have a look at. So that's really the whole thesis of this presentation. Starting off with ABSA, it's a banking group. Banking groups, obviously, and banks perform very well if the economies do better, because banks make money when interest rates rise. They do well as long as there aren't too many bad debts. And in the South African context, we've been about as badly hammered on the economy as we're going to be. So the bad debts are not rising, but they have what is called the endowment effect. And when interest rates rise, banking profits improve anyway, just by doing nothing. And if the economy, if we were to have scenario 1 or 3, in other words, the coalition between ANC, DA, or the pro-business friendly parties coming into power, then a company like this will do very well. But if you look at ABSA, it's back to where the share price was in 2014, despite that enormous growth that we've had. Part of the reason for this is the improved interest rates. So you're buying it, effectively you're buying this company at 8-year prices. But the second issue, or 8-year ago prices, the second issue is they've got a new management team, and ABSA has always been the worst bank. And now the management team is receiving quite a lot of plaudits. They are gaining market share. So you've got almost like a double benefit on ABSA. It's one of the favorite stocks, by the way. I didn't just sit down and decide to suck these stocks out of my thumb. What I did was tap into the expertise of those experts that we trust at BizNews. I'm talking here Piet Viljoen, Sy Jacobs, Andrew Vincent, Sean Pesh, John Bickard, guys who've got tried and trusted track record, and these are amongst their favorite stocks. There's one of my favorites right at the end, but these are their favorite stocks. Thanks, Stu, for putting that up. There's an interview with Ari Rotenbach, the ABSA CEO, which will tell you why people quite like the stock so much. What you've got to like about it, you're getting a dividend of 5.5%. and a PE ratio. Just to unpack that very quickly, what it means is that if you put R1 into the company today, their profits on today's profitability will cover that R1 in 8 years. And that's called the price to earnings ratio. Usually they run because companies tend to grow their profit base, especially if they've been going nowhere for 10 years. Usually those numbers run at 12 to 14 at least, maybe 15 times, because if you work it back, you don't wait 8 years to get your money back. If you're growing profits, you get it back in 4 or 5 years. Okay, but we use this as a ratio, and the ratio, anything below 10 for a bank is very cheap, and you can see that because you're buying the stock now at where it was 8 years ago. FirstRand, which is the leading bank in South Africa, another one. And here you're getting the stock back at, 2017 levels, but it's not at the peak. It's come back a bit from its recent high. Very strong results, financial results that were declared. The share price today is on a price to earnings ratio of 11. As the premier bank in South Africa, in fact on the African continent, it's not surprising to see that it's slightly higher rated than ABSA, and the dividend yield of 5%. That is very high by historical standards. But both of those stocks, and you can actually buy the other banks as well. Standard Bank, I didn't want to put them in here because you'd think, wow, you know, they're the sponsors. So of course you got to put them in. I felt that wasn't, but you can buy those shares as well as Nedbank. They're all rated for a disaster. They're rated for scenario 2. Piet Viljoen has been telling us about Lewis Stores for a long, long time. This is a company that's been with us for decades. It's sitting at a very appealing ratio. John Bickard, in one of the interviews that I had recently, said he made a lot of money for his clients. He runs what used to be the Investec Value Fund, and now he runs the it's now called 91 Value Fund. He's been around the block and then some, and he said that in around the turn of the millennium, I think 2002, 2003, that South African shares were very cheap. And the way he explained it on a roadshow was that you need to go in there and buy lucky sevens. And I love that description because it was like going into a casino where you pull the one-arm bandit and the 3 sevens come up and you hit the jackpot. He says his lucky sevens are when your price to earnings ratio, that how many years you're going to have to wait to get your money back, is less than 7, and when your dividend is more than 7. So if you've got 7 on both of those, then you qualify as a lucky 7. This one qualifies as even more than a lucky 7 on Lewis. And it isn't a company that doesn't know how to run its business. And as you can see here, it's sitting on PE ratio of under 6 and a dividend of 8.5%. The shares have gone up since the worst in the recession and of the pandemic, rather. Piet Viljoen has been telling us at every conference, every BizNews conference, that it's a stock that you can add to your portfolio. And even today, you're getting it back at levels of, well, more than a decade ago. So very appealing. These are stocks for you to look at for your post-2024 portfolio. It's almost like even in scenario 2, you're going to be fine with this one. And that's really what we've tried to do, because the market is discounting scenario 2. In other words, ANC, EFF, continued of poor economic management and so on in the country. AECI is another one there, as you can see, going back 10 years to when it was at this level previously. It's sitting, it qualifies as one of the lucky 7s in John Bickard's analysis, and it's one of the bigger stocks that he holds in his portfolio. One to make a note of and do your own work, your own research on. Roynet, again, another one of Bickard's favorites, just doesn't quite make the 7% on dividend yield, but who's unhappy with 6%. And then there, the price to earnings ratio of just below 10. It's really well positioned, this one, for the new economy. It does cables and heavy electronic infrastructural products. And as you can see, you'd have to go all the way back to 2009, excluding the pandemic, to have been able to buy the share at this price, remembering that there's been inflation over all of that period. So that's the reason why one has to, if you're looking ahead, one has to do some serious analysis and read the annual reports and consider Roynet as an investment. Tiger Brands, this one is John Bickard's favorite. He's got 11% of his portfolio invested in one stock. That's huge for a portfolio manager where they hate going above 5%, but he loves it so much. And not surprisingly, if you look through Tiger Brands' annual report, you will see brands that you consume every day, as we all do. Also, on top of that, it is a company that has been through some really bad times. It did some stupid things in Nigeria. If you recall, they went and bought a business there. I think they wrote off R1 billion. And then they had the listeriosis tragedy where people lost their lives because of the production process. Now, the view is that that's been sorted out. And as a consequence of that, Tiger Brands is sitting with its massive brands. It's turning around. The most recent financial results saw the profits up 35%. It's in that direction. And here you go back again more than 10 years when you last were able to buy the shares at this price. If South Africa Inc. doesn't do anything, you still are buying in here at excellent value relative to what the stock is intrinsically worth. Truworths, another one of the lucky 7s plus, PE ratio under 7, dividend yield 9.5%. And as you can see, go back again. I love these kind of making investments in these kind of companies, because you are buying 50 cents. You're paying 50 cents for a rand's worth of value. And that's really what you're talking. In some cases, it's below 50 cents. That's Warren Buffett. That's Benjamin Graham. That's the scenario we're going into. As much as exponential shares will give you those spectacular returns, as we've seen in the BizNews portfolio, they're not always the place to put your money. Right now, in this very troubled world that we're in, the place to put your money is in value shares, value stocks, those stocks where you can go to bed at night and sleep and not worry that because if you've paid 50 cents for a rand's worth of assets, even if it goes down to 45 cents, you still got a rand's worth of assets that you bought. But when you pay 2 rand for a rand's worth of assets, it can actually hurt you, as we've seen this year from the exponential companies. And then finally, this is one I threw in, Cashbuild. Cashbuild recently did a deal with Capitec. We know that those kind of access to the kind of base that Capitec can give them, it's right in Cashbuild's market, in its sweet spot. It's on a price to earnings ratio of 10 and a dividend yield of 6.5. It is excellent value, I think, given the market share that it's in, and remembering that as an economy improves, and post 2024 with better economic management, although we've got a lot of work to do, you can anticipate that will improve. If you have the kind of scenario that is possible, then you will find that economic growth actually gets widely distributed in a country, and particularly to the market where Cashbuild operates, which is in building supplies, much of it in the rural areas. So this is a stock that is definitely worth doing some homework on. Okay, things to watch out for, big risks on this. We have the ANC elective conference next month. Will Cyril Ramaphosa get re-elected or not? It's not what you think it is. The ANC elective conference is an auction, according to R.W. Johnson, where he who pays the delegates the highest price is the one who gets elected. And as a consequence, nobody knows who's going to be elected next month. But what we do know from our political analysts is that if the RET grouping, in other words, the conservative, the radical guys, the guys who would feel comfortable voting with the EFF, if they get into power at the ANC elective conference, it is likely to be the kiss of death at the polls come 2024 election, because South Africans are essentially conservative, deeply conservative as a nation. We want to get our kids to school, we want to see our economy growing, and we understand a heck of a lot more than politicians sometimes give us credit for. So if Ramaphosa is re-elected, it'll be the scenario that we've outlined here of a 41% for the ANC. If not, the analysts tell us ANC will be lucky to get 20. That's the story. Who knows? These are all in the future. All we can deal with is what we have now, so keep an eye out on this. The second point is grey listing. There's been a lot of work to try and avoid grey listing of South Africa in January, February next year. The stock market is discounting grey listing happening. So all of those stocks that we've outlined today are unlikely to be adversely affected by a grey listing. What is a grey listing? There's an international group that says you've got to get certain regulations in place. Otherwise, the criminals can use your financial system. And the criminals have been using South Africa's financial system, as we've seen from the Zondo Commission. However, there was good news on this score at the medium-term budget a couple of weeks ago with the acting Director General, Mr. Momoniat. He was saying that there's 2 pieces of legislation that the international grouping have insisted that South Africa get through Parliament. He was confident that this would happen before the end of the year. We've also got a centre of excellence in South Africa in the Treasury and the South African Reserve Bank. So beating the grey listing is in excellent hands, the best hands we possibly could have in our country. If it doesn't happen in January, February, there would be a positive impact on the market. If it does happen, well, it's already discounted. And then finally, the third point, the other thing that you need to be watching as an investor in South Africa is inflation and interest rate increases. These happen every month or so, both in the US and in South Africa. It's likely our next increase in South Africa could be another 0.75 of a percentage point. That's not going to be good for things in the short term, but it will keep inflation under control. And it's interesting to note that South Africa's inflation rate is under half of that of the United Kingdom's and is below that of the United States. Isn't that interesting? Even though by looking at the value of the rand, you would think it was the other way around. Just finally, here's a way of keeping in touch with BizNews. We're on television, BizNews TV, which is where a lot of our best work is being done nowadays. Please go and have a look at it on YouTube. We keep you updated there. Talk to the experts. Many of those interviews have been watched many thousands of times. And then obviously biznews.com. And we also do podcasts through BizNews Radio, which you can get on Spotify and iTunes. Okay, well, that's the end of my slideshow. Stu, any questions?
Thanks, Alec. Just a couple. I'm not sure. We've got a few more coming now, which is nice. Evelyn just wants to know, I don't know if you can answer this, Alec, is how can we increase the percentage of the voting public? She seems to think that the ANC benefits from those who don't vote. I don't think we can answer it, but just a coin toss there.
No, very good point, Evelyn. And in fact, that is what both the Action SA and the DA are busy doing. In a recent interview with Herman Mashaba at Action SA, he said he had 18 full-time people who were going around talking to people primarily in the townships and asking them whether they've registered to vote, and if they have not, using their own cell phones to register these people so they're ready for the 2024 election. There's a genoeg factor within the traditional ANC voter, which we're hearing from people like Frans Cronje, who spends a lot of his time analyzing. He works now for the Social Research Foundation, and as you can imagine, research is in the middle. So he spends a lot of his time talking to ANC voters, and he says that the ANC voters many of them are like people who support a football club. When your football club is losing, you don't stop supporting them. Sorry, you don't go to another football club. You actually just don't go to the games. And so the idea is that many of the ANC voters have said, genoeg, I'm not going to vote for these guys, but it doesn't mean that they're going to go elsewhere. So as a consequence, there will be a reduction in the ANC through a lower voter turnout of its people and an increase for the other parties as a consequence. And then what those parties are doing, like Action SA, like Musi Maimane as well, he's spending a lot of time getting people registered. And the DA is they saying, just register. Doesn't matter who you vote for, but just register, because they know that the likelihood of that is going to be in their favor.
Thanks, Alec. Robin just wants to know, with the scenarios, do you sort of have a forecast on the rand dollar? I know we don't look at forecasts, but an idea of what could happen if depending on scenario 1, 2, or 3.
Well, the rand is, by any analysis, certainly from the people who do the analysis and that we trust and listen to, it's significantly undervalued. Usually what happens with exchange rates is that they follow inflation rates. So if your inflation rate goes up, is higher in one country than another, then your currency will weaken. That's the classical argument. But South Africa's inflation rate is below those of its trading partners, and it's just continues to weaken because of the perceived concerns over the poor economic management of the country. I'm going to put that dirty picture up again, because if only South Africans understood this, if only we all understood this and understood that we are borrowing today from our future generations, we're borrowing from them to pay the interest on the debt we already have, it kind of makes things a little bit more understood. So all I can say to you is that if there is an ending to the investment strike from abroad, they have to buy rands to invest in South Africa, and that will obviously suggest that the rand would be stronger.
Thanks, Alec. I see we've come to the end of our 45 minutes. I see Giovanni is ready on the Standard Bank side. So if you want to close off.
Yes, I will indeed. Thank you, Stu. It's been, as always, a privilege and a pleasure if any of you were at those presentations around the country. I love getting out there. Thank heavens that COVID is over. But really, the idea of this webinar and of the roadshow with Standard Bank was to say we are going into a new future. It's a different future. South Africa has been a one-party state pretty much since Jan van Riebeeck landed at the Cape in 1652. There were two very, very short periods where there were coalition governments in the old regime, and that was in the 1920s. But outside of that, it has been a one-party state where we're at the colonialists, colonial powers, or we're at the National Party, or we're at the ANC. They could make the rules as they saw it. Post 2024, that is no longer the case. Even if it's an ANC-EFF coalition, both parties are going to have to listen to somebody else for a change and not just implement what they think. And that is hugely positive when you start taking other people into account when you make your policies, rather than just making policies for the people who support you. So I'm excited about my country. I think you should be too. Try and see it in perspective and try and see the future that we're going into as one where there is hope, and maybe, who knows, we can make this country worthy of all those thousands, hundreds of thousands of people who've left our shores and taken their skills elsewhere to actually come back home and to help to rebuild what needs rebuilding quite badly. Thanks. It's, again, as always, a privilege to be with you today.
Thanks, Alec. Giovanni, you want to come in? See your audio on.
Just a quick thank you very much to Alec. That's very insightful presentation and definitely begs food for thought into the future. So thank you for that. Yes, I'm here really to give an overview of a new product that we'll be rolling out quite soon within online share trading that we are very excited about. It's called investment-backed lending. And I think starting from the beginning, essentially what is an investment-backed loan? Simply put, an investment-backed loan allows you to access credit against your investment portfolio, much like an access bond would be secured against your property. Where it differs from an access bond, so an access bond is usually specified to a specific term, the IBL facility is open-ended, and as long as the shares remain pledged, you can have access to the facility. We're able to get a real-time market value of your security at any point in time, and your limit will adjust dynamically according to market conditions and the value of your portfolio. So let's have a look at